Should be good to go, guys. If Riley, you want to touch on your fundamental list and
Okay.
do that.
Welcome everybody. You don't think we should give it a couple more minutes to see if people are having trouble logging in?
I don't know, because it is being posted to YouTube after, so we can always take that and put it in the...
Okay, well, let's give it a go. What I'm going to talk about probably for the next 5 minutes or so is what I call 6 keys to identifying fundamental day trades. And fundamental investing is very different than fundamental day trading, but that would be a whole other session. And with the market the way it is right now, most of what I'm doing is just day trading. And the people on Wolves, you know, really get to see kind of what I'm doing, but I want them to understand why. So basically, the fundamentals are the start of the ability for a stock to move up and what's going to propel it. So out of the 6 keys, the first one is basically economic and futures. Is it bullish or bearish? An example is looking at what's going on in the world economy, reading CNBC every morning. Why is oil up? Why is oil down? And today was a very confusing day for that, actually, because based on the report, oil should have gone down. So there were some articles we posted out there. It was kind of a confusing day for that, actually. But with your ETFs, it's important if you're trading ETFs because you have to look every morning. Where is gold? Where is oil? What reports are going to be due today that could impact that? What are the foreign markets doing? Asia. Is the SPY going to be up? Is the SPY going to be down? So that's the first key. The second one is earnings. And earnings for the last 3 quarters have been a pretty good play if you thought the company was going to be. Usually stocks would rise into earnings, and you could sell it before the earnings if you were unsure. But I've noticed recently a new trend with earnings that basically people are cautious now about it. They want to see the earnings first before they jump into it. But a fundamental way to play earnings is to wait until the earnings are released. If they're positive, jump in. They will go up. If they are negative, it could be a good short depending on the amount of the miss. But investors are a lot less forgiving now than they used to be with earnings misses. The stocks tend to drop a good bit more. Okay, the third key to identifying a fundamental day trade is upgrades and downgrades. I post this every day. Sometimes y'all look at it, sometimes maybe you don't. But depending on who rates it, what the rating changes, and the degree of change, and the company that's being rated, ratings can move a stock up from 1 to 10%. They can also move a stock down 10%. So upgrades and downgrades are also an important part of identifying a good fundamental day trade.
Do those upgrades come on a PR for the stock, or are those purely...
They do, usually, as well. Now, I check Bazinga every day because that's the first place it usually hits with the ratings, and it's updated. Like, as soon as I post it, it's outdated. You can check it every 30 minutes throughout the day, and the list will get longer and longer as analysts release upgrades. But as soon as it's released, you'll see a PR. Like OAS was a good example today. Even though the offering just completed, OAS got a big analyst update today that with a price target of $9. So you watched OAS go up today. Whereas if the offerings were just out there and they announced a completing today, it might not have gone up that much. Now, it didn't hurt that oil was up, but remember, it was a weird day for oil. So oil went up, then oil dumped, then oil went up again, but OAS continued to go up because of that analyst rating. So analyst ratings can be important. Now, the more expensive the stock, the more it will move them sometimes. So when you're talking about stocks under $5, it's hard to tell, but it depends on what the price target is on the stock when the analyst gives it. Does that make sense?
Yeah.
Okay. Okay, the fourth fundamental is news. I wake up at 6 o'clock every morning. I pour a cup of coffee, and I start reading. I go through my Scottrade stream, and I literally sometimes in the morning read 200 or 300 different news headlines. I don't open them all up and read them, but I'm looking for something that is big enough news that it will move the stock. And I read really fast. I'm kind of like the news whisperer. Like I'm just constantly reading, looking for something significant that can truly propel the stock, like a merger, a reorg, a PR on a contract, something that will add value to the company enough to move it that day. Some moves come pre-market. Some moves are big enough that they'll come throughout the day. But that's the fourth one. Okay, the fifth one, market flags. Okay, and this one kind of borders a little bit on technical, which is not my strong suit. But you're looking for things like a stock that's oversold, something that has unusual volume. Sometimes you're looking for a stock that's overbought, meaning it's trading below its value, and you want to see if it will move up or if there's a reason. Percentage gains, a large insider buy, a new high of the day. And FinVits has all that. I love the FinVits site. So if you're looking for something that's like a market flag that can help you look to see if a stock may move one direction or the next, FinVits.com is wonderful. It also has charts, like head and shoulders patterns, trends up, trends down. So that if you're not familiar with the technical side of trading, you can look at that and see what's going to move up. All right, and the last one, hopefully I haven't talked more than 5 minutes. The last one is catalysts. And I look at catalysts as, you know, the ones that we've talked about before are things that happen real time. In other words, you can't plan for them. But this last category is something that you can plan for. It's a watch list. You're looking for things like phase results that they're announcing are coming in a month. So you know those are coming. AMDA, prime example. Everybody's waiting on bated breath to see if we get FDA approval. And we know it should be next week. That should be on a calendar somewhere. Stock splits, okay? Stock splits generally show a company that's having some trouble. Is it a risky play? Yes. However, I've read a couple books that show there is a way to play stock splits where if you watch them anywhere from 45 to 60 days out, a lot of them, because the float has been reduced, will pop really largely on news. So it's just another fundamental play to look at. And then any milestones in earnings, any conference calls they have upcoming, any for biotechs, where they're presenting at some conference and they're going to release news after. These can all be good, just fundamental catalysts that will move a stock up. And so that's kind of what I post out there every day, and I hope it's helpful. You know, it
sure is.
It's what I do.
I have a question. For fundamentals, is there like certain kinds of stocks that it's only like that are better to play fundamentally than others?
No, but you have to look at a sector when it comes to fundamentals. For instance, there are a lot of things that fundamentals will tell you about an entire sector. Let's take retail and the big retail giants, and let's say that 3 out of 5 of them report before the other 2. If those 3 are doing exceptionally well in their reportings, you can make really good assumptions that those next 2 are going to do equally well, which makes them a more solid bet. Does that make sense?
Yeah.
So you're looking at sectors sometimes when you're looking at fundamental too, not just one little stock. But you know, you also have stocks that, okay, look at CYTX today, and it's one I see come up all the time, Cytorial Therapy. Yeah. I mean, it's awful. They released a great PR this morning. It moved 0.008. So when you're looking at just fundamentally playing news, you've also got to look at the volume that's coming in. Is it enough to propel it? You've got to look at the float. In other words, if there's 50 million shares, it's not going to move like there's 10 million shares on exceptionally great news. So there are other pieces that help you to determine whether or not a stock is going to move as much as you hope it will.
Yeah. Maybe, yeah. I'm going to pull up the Sanchez chart today. I have a question about the oil thing today, and maybe you can tell me why it did what it did.
Why is it on me?
spit on you the whole time. I don't care.
Oh, God.
Can you guys see my screen now?
Yeah.
So obviously this morning it was in the downtrend, which was what I was hoping it was going to do. And then when that report came out, it shot back up. But wasn't that oil report today bad?
It was. It was terrible. Today was very atypical what happened in the market with oil. It really, I'm not sure I'd seen anything like it in a year or two. The report was horrible, and if you were in UWTI at the time, it tanked. Everybody sold and got out. As soon as the oil report came out and it tanked, a couple of news articles came out about Russia getting the countries in OPEC to be able to sit down and talk about oil. Well, that spiked oil immediately after that. But oil probably really shouldn't have gone back up today. On a typical day when that hadn't happened, oil would have tanked. Does that make sense?
Yeah, do you think it'll retrace the couple next days?
I do, unless they get some meeting firmly in place with OPEC, but that's just my opinion. And we'll have to see what news sources like CNBC say about it tomorrow. And we'll have to see what the futures look like in the morning. It's really hard to predict futures from one day to the next because you don't know what's going to happen in the world. That's why, like the first one that I talked about in the fundamental trading is so important. It's knowing the economic market and what's going on with futures, you know, literally on an hourly basis. You can be trading one of those ETFs and some news will come out and it will instantly tank it.
Yeah.
So you've got to be watching what's impacting the ETFs when you're in them.
Yeah. Okay. Real quick, I want to, my alarm's going off. I want to show you guys this TVIX chart and tell me what you guys think about happened today here.
I was about to get in it, but I was too busy trading Eunice. And then I looked over and I see it running 10%. I'm like, oh, that's nice.
Man, I was sitting here and I was in class and I was just like playing around and I was just thinking of like what I would do if I like had money and had the ability to trade this right now. But I was sitting here and I watched it bounce off this 13 SMA. It bounced up and I saw it come to retrace and I told myself I'd say if it breaks that, I'd watch until it broke it back up, and then if it bounced off that, I'd buy in right there and then cut my losses quick if it went back down to that line, right? It obviously broke that line and hit that almost 3 times as a resistance, and then I watched it break it and it was sitting at like 882, 883, 884. And in literally the next 5 minutes, it gained almost 50 cents and saw the high of the day right there. But I'm just curious if that's like a reliable like line to use like support and resistance for like such a highly like liquid stock of, you know, that's like it's super liquid, super volatile, it goes against the market, etc. But is that like
John, what time was that?
That was about 10:30 Eastern.
Okay.
So it was about 9:30 my
All right.
time.
The only reason that I may say that's atypical, and I'm not a big chart person, is because the oil report came out at 10:30.
Mm-hmm.
So when the oil dropped, it drove the market into the red instantly, and then oil rebounded, which made it retrace. So again, this is one of those examples of something fundamental that happened economically that impacted the price of an ETF.
Yeah.
In my opinion. Now, you still may be onto something with the support there, but you're going to have to test it on a day when there's no news.
Yeah. Well, I was just looking at it, and obviously, like, it looks like that SMA is hitting, like, the resistance right there, you know, and right here it bounces off of it. Here it broke through, but I'm sure if you changed the days a little bit, it'd see, like, that as a support for it. So I was just curious if that's like, I'll have to ask Oscar about that, but that's what I saw today and kind of intrigued me. So
okay, I'm done. Who's up next?
Jacob, do you want to talk about your what you go for in a stock with your three main technicals that you were talking about the other day?
I didn't find any of those. Any of the. Oh wait. Can you guys hear me?
Yes.
Yeah.
Okay. I didn't find any of those today. Basically, the one I traded Eunice, I got in when it rolled over $1 because I'm a triangle trader at heart.
Can you bring
And,
up a chart and show us what that looks like?
Yeah. So I alerted this Monday for anybody who was in the chat, in the Wolves chat, for $1 for when this stock UNIS broke over $1, and I call it the dollar roll, which is why I wonder. Okay. So basically, this stock broke down below $1 right here, and it kept testing $1. It tested it 3 different times before it broke out today, and that's it created nice resistance at $1. And if you follow stocks any longer than a month or so, you'll see that when a stock establishes resistance at whole numbers very well, and once it breaks whole number, it normally you can see a nice gain. Like I'm expecting a lot more for UNIS over the coming days. I know Riley didn't like it fundamentally, but we'll have to see where it goes from here.
Yeah.
I saw it this morning when it broke. It opened the day above it printed 2 candles and broke $1, and I got in right here and saw and wrote it out here, and then it broke down. And once it broke the 13 EMA, I got out. And as you can see, it was for good reason because it broke down over the rest of the day and basically flagged. So I used, John, what was it, the 13 SMA that you used?
Yeah, that's what I was using today, and I've read every like technical trader I've heard they either use the 13 SMA or the 22, I believe, or something for kind of like a swing trade, but they typically use the 13 SMA for a day.
Gotcha. I used the 13 EMA on both daily charts and minute charts. I also have the 50 SMA down here. I basically use it for when they cross. It's usually a good signal for either a swing to the downside or a swing to the upside.
Mm-hmm.
I noticed. Oh, go ahead.
On that chart you're looking at right now, I can tell that on the far left side when it made that big gain, it's obviously above the SMA, and then once it dropped below that, it's using that SMA line as resistance. It hits it once midway, and then it comes up, hits it again, can't make it through, and uses it. So
trades around it, yeah.
Yeah.
But we were talking about stop losses earlier. I basically used the breakdown as my stop loss right here. I got out like as soon as it broke down below it, and I was really hoping to see like a 20 cent gain once we saw volume coming down here. But
I think if the warrants hadn't been in play, you would have seen that.
Yeah, you're probably right, because I mean, news affects everything. Anything that comes out. I mean, you could they could release news about a company CEO's dog dying, and the stock would tank. And TVIX, I was watching this while another one I played. I didn't play it. I was gonna play it. Was I think it was CANF maybe CNAT. I alerted that pre-market. So basically, what I call a AMF pattern is a morning flag. It's basically you have the opening candle, and you establish that as would be resistance. And whenever you break above that, it's normally a real strong buy signal. And as you can see, for TVIX, it was definitely effective because it went up like 10%.
Yep.
And I normally have bigger runs than that. And then sometimes I have breakdowns like CNAT. I expected this to break out at the end of the day because it flagged up with an ascending trend line right here, and it just kind of broke down over the day, which is a disappointment. It's all good.
Do you have any stocks right now that you're looking to possibly play the rest of the week? If you could like bring one of those up and tell us why.
Yeah. As I said, I was gonna keep in. I was looking at UNIS for a continuation, but TCK broke out pretty, had a little upward movement, and it's another one of those triangle patterns like I was talking about. Basically, it made a red to green. Well, it gapped open and then went down red, and it made a red to green right here, and then it just ran ran up basically all day, as you can see, and consolidated at the end of the day.
Yeah.
This doesn't really trend any of my intraday patterns, but so I didn't. These are the kind of posts I put on my blog. Is it basically triangle patterns with an ascending trend line, established resistance. As you can see, it bounced off right here.
Yeah.
So hopefully we can get a $4 break and hopefully see a nice trend to the upside.
Yeah.
But basically, I just go through FinViz and find these chart patterns and just kind of follow them. And they might not break out for a week or so, or 2 weeks, or whatever. But eventually they'll either break out, or break down. And if they break down, then they're dead to me. If they break out, then I'm screaming hallelujah.
Yeah. There's a question from the Facebook post from a while ago, but Carlos asked how things to look for in companies that will possibly make them explode. And the example I thought of was USMJ, Riley. That first week you told me about it, and then the week after that it saw that 400% gain. Do you want to talk about why that was going to happen in your eyes, real quick?
Well, I mean, the things that will make a company explode are the things that I talked about earlier. It's those 6 fundamentals. It depends on how much of them there are, but the interesting thing, USMJ is a very risky penny stock. No one here is promoting that by any means. But USMJ did something unique, and the fat lady hasn't sung yet, so to speak. They were trading around a penny, and they announced they were going to give a share-for-share dividend in the new company, which is Pura. All right, this was about 6 months ago. Now, what they hadn't anticipated, I think, is the fact that this is the first time they were doing this, and the stock exploded. Because basically, if you own the penny stock, USMJ, you were going to get equal share for share in another company, which would basically double your money as long as it was above a penny. At one point, the Pura was up to like 4 or 5 cents. It's back down to about 2 cents now. But they've encountered some difficulties getting the dividend out. It's still not out. I'm still holding those original shares. But they have reestablished it in another state. They're going through the proper things. But things like that will make a stock explode. And let's look at, Lucas Energy from earlier this month exploded huge. There was one today. It was a gold stock that went up almost $5. Well, that was based just on gold price. But low float stocks, LEI was a perfect example of a low float stock that had gone through a reverse split and got an excellent merger acquisition news, and it flew. And then you have like the things that'll make a stock fly, like Martin Shkreli taking them over, like K-Bio. I mean, that was like the ultimate one of the last 5 years. I'm sorry, but anybody who saw that was insane. The stock was like about to go bankrupt, and it went from $1 to what? I think the high was 35 or 40 bucks at one point. It was crazy.
Yeah, it was like 48.
$48. So there are things like that are rare. These are rare. But you try to find them whenever you can through the fundamentals. And that's, reading the news and trying to find something that will make it pop really big. That's the best way I can put it.
Yeah, that's good.
There's no formula to predict that. It just happens.
Yeah. Shaun, you here?
Yeah, I'm right here.
All right, sweet. Do you want to talk about your looks in these next couple days, etc.?
Sure. So what I usually do is straight charting, especially through earnings season. Screen share what I have going on right here. Break down some charting methods that I use.
We're not seeing video for you.
Yeah, it's black.
It's black.
It is right now. Hold on, I'm in the middle of a screen share. One second. There you guys are. All right. So this is the most simple one. This is Yahoo Finance. What I like about this is that the guys in this room, they'll understand this one pretty easily. The upper and lower bands here are your Bollinger Bands. The reason why I recommend using this to start off is that this is what the institutions use, your big guys like your Schwab, your JP Morgan, your Goldman Sachs. This is what they use to bounce. So if you notice, anytime there's a bounce, there's an immediate rebound. So right here we're looking at Disney, symbol DIS. Last week, or no, I'm sorry, 2 weeks ago it hit its lower band and it jumped up. It's slowly moving down, and we're actually in a hammer position right now, which indicates that it will move up. But with earnings next week on Tuesday, we may see a rise all the way up. Until that, typically what happens in these earnings seasons, when it continues to rise all the way up until earnings, there's a huge dip. So with Disney, we may see a drop only because their expected earnings is 1.4 per share. So when we do see that, a run-up, we expect the opposite. I think they'll meet expectations. I just don't think they're going to beat it. This is my favorite one. This is what you guys see me post on here. This is from investing.com.
Hey, Shaun, we still see a black screen, I think.
It says it's sharing.
I didn't want to interrupt you, but I don't think anybody can see it. Can anybody else see anything?
Can anybody else see it?
I did for about 2 minutes there, and it just went black about 30 seconds ago.
Yeah, I couldn't see it at all.
Me either.
I wonder.
It says it's sharing.
Can our audience see it?
Did you hit present to everyone?
Show.
It says I'm presenting to everyone.
I still have black.
Me too.
Yeah.
All right, let's see here.
Are you on Apple or PC?
PC.
Interesting.
Yeah, it tells me if I can stop it.
Do you want to try leaving and hurry and joining back in again?
Yeah, sure. Give me 1 second. All right.
All right. So I don't really know anything about Bollinger Bands, so.
Yeah. Well, I know people use Bollinger Bands. I know Oscar uses them quite a bit for, like, kind of helping to tell technically when a stock will start an uptrend, or like when the MACDs cross.
Yeah. To me, it kind of looks like a RSI just on the chart.
Yeah. Do you have that link? Post that in the video chat real quick for Shaun again.
All right.
Shaun's back.
All right.
Oh, I see you now.
All right.
Perfect. There we go.
Let's see if we can try this screen sharing thing one more time. Can you see me?
Yep.
Well, I can see you.
You froze, though.
Yeah.
Good for me.
All right. Can you see this? Can you see the chart?
Nope.
No.
All right. All right.
Go into your settings real quick at the top and go to Oh man, where was it? There's a way to lower the quality of your upload.
Yeah, I see that. Let me see.
Or maybe your download. Try your download first, and that way you can save a little. There we go. It's working now.
Yeah.
Okay. All right, so you can see this?
Yep.
Yep.
All right. Sorry, guys. I didn't know what was going on there.
No worries.
All right. So this is the chart. I don't want to go back over everything. You guys heard. Just give you the brief rundown. Bollinger Bands. This is what the institutions use, such as TD Ameritrade, JP Morgan, Schwab, Goldman Sachs. As you can see here, anytime it hits the lower band, there's a bounce back up. And then the upper band the same way. If we look over here, this rode the upper band for a little while, but then came back down in the next week. This is Disney. Their earnings is next week. So we can see right here, it hit the lower band at 91, which is the lowest it's been in about a year. And then it's starting to slowly come back up. With earnings on Tuesday, you may see a small rise up to 100. And then typically when that happens, there is a huge drop. I don't think Disney is going to miss earnings. I just don't think they're going to beat it. They have a high earnings per share at 1.4. So going over to investing.com, these are the pictures that I post every so often. The reason why I like this is that I can add studies. So we still have the positive or negative movement in the chart. What I like here is that we can add the studies, and I'll show you how to do that. You go right here, and you have a whole list. So you guys that are really into charting, you can pick whatever you want here. And I've already preloaded Bollinger Bands, and one of my favorites is the Ichimoku Cloud. So some of you may or may not know what that is. What was that?
I read up a little bit about that. The less the cloud, the less resistance, etc. But go ahead and explain it.
Easiest way to do it is when it's coming up on a cloud, it usually goes through. And if it breaks the upper level, you're going up. And you can see that right here. Back in November, it was below the cloud, but it was right there. As it broke through, there was a little bit of resistance between here after their earnings, but it went from $99 to $100 a share all the way up to $121 at its highest. Then when it reached that, it started to slowly come back down, which is why everybody's really high on Disney right now. You can see the lower Bollinger Band right here. So we're going to have to take a look to see what happens, but they are below the cloud, which is promising for what they have in store on Tuesday. And then last one, if you guys are interested and you guys want to get creative, the stock charts. It's something that John actually showed me yesterday. I don't usually draw my own charts, but this is fun. What I like about this is that this has the stochastics already implied in this regular chart. And the importance about stochastics is that it shows regular movement over the course of in this period, 3 months. So if you notice here, the black line represents positive growth, and then the red line represents negative growth. So as you are looking through that, you can see the motion of the stock. Typically, when the negative line is above the positive line, there's a negative flow to the stock, so it's most likely going to go down. And you can kind of see that right here. Once it crosses over right here, there's going to be a turn. It doesn't necessarily mean it's going to shoot up once again to 120 like it did here, but it will go up. And you can see how that's reflected right here in the past when they were about to release earnings. And then right here is when you start to see some volatility or lack of selling and buying. The line went over the positive line, and then we're back in the negative area, and then just recently it took over positive lines. So you may want to consider that when you are looking into this. What I like to do, how I would play this, is I would pick up a 100 call expiration February 12th, so next Friday, and I would get that. I think right now it's going for 66 cents for a contract, so it works out to be $66. You can even go a little bit higher and go to 101 and that goes for 48. So you can get 200 shares for about $100. If you guys have questions and options, you can always ask me, but I don't really want to get into that right now. I just wanted to go over some importance of charting. So if you go to stock charts here and click annotate, you can draw your own trend lines. So you can see that in regards to Jacob's triangle, we can create a little triangle here. And I can see movement if I can actually get this going. Did you have a question?
No, I just said I see it. No, I just said I see it. The triangle. The triangle.
Yeah, so once you get the visuals down, you can see where it's coming up, and you can go from there. Let me see if I can get this going.
A quick question for you, Riley. There was a question on the Facebook post I just put, and it's, what do you think of the oil stockpiling issues?
Yeah.
I don't know that they're going to be resolved anytime soon. Did Artin ask that? I bet he did.
It was Chu Chun.
Oh, okay. Anyway, I'm not sure what's going to happen with it. I think it's great that they're all coming to the table, but the bottom line is this. I don't think we've seen oil bottom yet. I think we had a nice bounce today, and it will continue the downtrend, but we're going to have to wait and see. OPEC doesn't really have an incentive right now to draw down. There are some countries, rather, that are not going to do well financially if they don't do it soon. But it's kind of a game of chicken. They're trying to see who can last the longest. OPEC met, I guess it was less than 2 months ago, and decided to do nothing. So we're just going to have to wait and see what happens, but I don't think oil has hit bottom. But there's so much, you know, half the people say it has, half the people says it hasn't. We're just going to have to wait and see what happens. Personally, I don't think it's hit bottom yet.
All right, hopefully that answers that question. Shaun, back to you.
You know, I was...
Oh,
did we lose him? We lost him.
We lost him.
Yeah.
Let's see. Ant is wondering, any thoughts on dust at its current levels? Also, it looked like the last 3 candles of the day were green. Any significance there? I'll pull up that chart real quick.
If you look at the daily chart, it just broke down on big support. You look at it from a year time span, at about lunch, it broke down.
Dust is not inverse, right? I'm pulling it up on mine now. Dust is
I don't believe so, no.
I can't really tell what it is. It doesn't look like it trends the markets at all, really.
ScotTrade's not alerting me that it's an inverse, so.
No, it's a bear. Dust is the bear, so it's betting on, that gold is going to drop. And see, gold hit a new high today, I believe. I posted something out there about it. So if you're betting on it to go down, the problem is when the market is red, gold goes up because people still see gold as a safe haven. I don't know how long that's going to last, but if it had 3 green candles at the end of the day, it may be fine. You just have to wait and see.
I'm showing a small green and then 2 red candles following the close. I'll pull that up here. Can you guys see this chart?
Yeah.
So this is the last, however ticks. This is a tick a minute here. But this is what I'm showing for the last 3. It's falling below that SMA again. And it seems like it was pretty much riding that and hit that resistance right there and right there, broke through barely, kind of went up and down. But I'm not showing 3 green candles.
No, I'm showing 1 long red. I'm looking at the one on investing.com for it.
Yeah.
On the 1 day. If you look at the, let's see what the 30-minute looks like. Nope, still 3 red candles at the end of the day. Now, if the market goes bright green tomorrow, then gold may drop again some. That's why the fundamental side of it is so important, because it's all linked. What's going on in the economy and what's going on in the markets and the futures.
Yeah. Looks like Shaun back.
I'm here.
Perfect. We lost you for a minute.
Yeah, it's gone.
You want to continue where you left off, or?
Well, that was pretty much it with chart. Spend most of my time there.
Okay.
So watch 3 or 4 stocks in a certain time period and go from there. I don't trade, look for the next one, not yet. If I ever decided to do full-time day trading, it would be 4 or 5 stocks at a time and let it go. So that's how I chart. It's been working out for me. It's all options. I don't bother holding equities. The only stocks that I own right in Apple dividends, and they're sitting in my retirement account.
Yeah. Well, we don't have any more questions on Facebook or in the chat, so if you guys have anything else you want to bring up or talk about, we can, or else we can cut it here.
Take profits quickly and cut losses quickly.
Yes.
You can let your winners run, but as you can see, they will turn on you. From UNIS this morning, I gave back half my profit in like one candle. It's quite depressing.
Yeah. I'd say definitely take losses quickly, just because, well, I don't know, it depends. I know John Hanna was telling Chris the other day that that's why he put 30% of his investment in UGAS, so he could double down with the rest, because at the end of the day it went back up. But personally, I don't see a problem where Chris cut his loss for a $10 loss and playing it safe, you know, because you never know if that's going to continue down, really, in the next amount of time. I don't know, that's just me, though. I don't see anything wrong with that, because you can also use the other 60 that you're going to double down with to buy back in and play that uptrend for the day. So
Does anybody have any more questions?
think
Yeah.
we're...
Can you guys see the Q&A?
No. I can see where you posted, but I can't see anybody else's.
I'm
All right,
only showing Ant's question on the Q&A.
Yeah, that's the only thing I see.
Okay, well, look, if anybody who's watched this, or to the people who watch it after we're done here when we post it out there, if you have any questions, just post them on the WolvesTrading page. We'll be happy to answer them.
Yeah. Mohammed said that, wow, this session was helpful, so at least it's helping some people.
Good.
So, yeah, well, tonight, guys, was kind of more of a trial thing for this, so we'll post the published YouTube link in the site tonight and ask you guys what you think, what we can do next week that'd be better for it, or whenever we do this again. So any suggestions like that. But other than that, I think this is the end of our first webinar. So thanks everybody for showing up.
Thank y'all for coming.
Thanks, Shaun. Thanks, Jacob.
My pleasure.
Thanks, guys.
Yeah,
Thanks,
thank
guys.
you.
It's been fun. You know, message any of us.
Yeah.
Yeah, we'll have to get this a little more, we can get a better agenda down for next time and see what other people liked and didn't like about it, and stuff like that. But I think it went pretty well for just having a test run yesterday, so.
Yeah.
All right, well, thanks, guys. See you later.
Bye.
Take it easy.
See you guys.